AI is not going to be that hard to incorporate as long as you have a clear, understandable area where you understand what are your concerns with potential misuse of data. How can
Yeah.
you build a transparency into the development and the deployment of it where I can foster trust with my customers, and I'm going to make sure that you trust my system when it comes to this.
Welcome to the Fintech Cast, the podcast that unlocks the future of financial services technology. I'm your host, Sunil, and I'm thrilled to guide you on this transformative journey through expert interviews, trend analysis, and thought provoking discussions that will walk you through the limitless potential of the fintech. Today, we have our guest, Aris Jerahian, who is the Vice President of Digital Experience and Payment Services at the Oregon Community Credit Union. Over to you, Aris. Can you please introduce yourself and your background to our audience?
Thank you. Well, thank you for having me here. Again, my name is Aris Jerahian. As the Vice President of Digital Experience and Payment Services, I'm in charge with all the digital aspects of the credit union, how we interact with our members, as well as from the payment sides, wires and ACH. My background, I've been into the payments industry for just about over 30 years. Starting from the processing side of it, and then eventually moved to the issuing side of it, and then working for Oregon Community Credit Union. That pretty much sums up my background. Everything within the cards related, digital related. How can we automate our processes? How can we improve processes? But that's really the goal of pretty much summarizing my position.
So you said a digital experience, and that's the biggest role that you have. Can you talk a bit about the digital evolution and what it means for credit unions?
Sure. I mean, we actually went through the process of saying, hey, digital transformation. We first said, okay, it's not really a digital transformation. We've had Apple computers since 1976. We've had digital watches since 1970s. So is it really a digital transformation? Not really. It's a digital evolution because we are evolving in what we do. Members' expectations have changed. They want immediate responses. They want immediate loans. They want immediate approvals. They want immediate. So that has kind of put a burden on the financial institutions to go back and really identify how can we do things differently? How can we better meet our members what they want? So the first thing that we said, okay, we're not just going to digitize, because a lot of financial institutions, what they do is a digital transformation to them is, okay, if I digitize this process, then I'm transformed, I'm done. No, there is no end for the digital evolution. It's going to continue grow and grow and grow and grow. So for us, it was we had to come up with a strategic direction of what exactly are we trying to execute here? What is our end result? We want to adopt technologies where it can help our members, but at the same time, we didn't want to adopt 20 different types of fintechs at the same time. Now we're going to have a big mess in our hand. How am I going to manage 20 different vendors? We also wanted to, just because it's the latest technology, it doesn't mean I had to have it right now. For example, AI, that's the latest technology. It doesn't mean I need to jump in it at this time and at this time. We have to think about it
Yeah.
and say, hey, can AI really help my customers? What can we do? And also always remain focused for the future. I mean, our digital transformation or evolution roadmap is really a 12-month roadmap because I can't go any further than that. It's changing on a monthly basis. So that kind of puts us a focus. It gives us strategic direction. It gives us alignment with what my board is asking for and what can we do to improve our members, because the members' demands are changing on a daily basis, how they want things done. So we want to stay fluid, we want to stay agile, but yet we want to have our hands in the pot with the right technology at this time. Hopefully that
Got
answers
it.
your question a little bit.
Yeah. Let me follow up with a couple of questions on that. I know with digital experiences, bringing in too many technologies too fast is probably not good for an average customer anyways, right? So they've got to be tech savvy and they cannot. It's also about absorption of the technology. So
Yeah.
your demographic, what kind of demographic do you have, and are they open for these brand new digital experiences?
We've gotten to a point where I think demographics have become an old school method of measuring who's your base.
Okay.
Because between the millennials, between every age group, everybody has become attached to their phone. Everybody's on Facebook, TikTok, whether it's my mother, whether it's my grandmother, whether it's my 14-year-old son. They're all, so they're all into that tech. As much as they say, no, we don't like it, they're on it. So it really comes down to what is it that my members are asking for? Or what is it that's going to improve the relationship that I have with my members? So it's not necessarily what the members are asking for just by itself, but how is that going to help my mass customers? How is that going to make their life easier? So you have to look at it from different lenses for you to say, yes, we can do it. For example, it took us a long time for us to say we definitely want to have chat on our customer service because we know our customers like those one-on-one hand touches. They don't like to go the automated way. Does that mean I'm not going to do it? No, we eventually decided to do it, but we are rolling it out slowly. Certain questions you can only have a chat bot to answer for you, but then the rest is still a hand-on-hand shake. So it just comes down to how you're going to roll it out. Because if we do a mass roll to everybody, you're going to create a panic within your customer base. So you do it in small bits and pieces where it's easier for the customer to absorb and kind of start using it. But they're getting trained. They're getting trained by Amazon. They're getting trained by every one of those large corporations where it's right there and then. So if you don't do it, you can be left behind.
That is true. That is true. You don't need to train them because they're already getting trained outside.
Yep.
I know you mentioned the 12-month strategy that you said it's fluid. So what's hard right now? What is it that you're trying to digitize at the moment in the next 12 months? What's the immediate one?
So the first thing that we did was really understand how can we better identify which fintechs we want to partner with, and do I want to bring a new bank? So in doing that, what we did was we looked internal first. We said, how many platforms do we have out there? Whether it's the Glias of the world, whether it's the Mantles of the world, whether it's the Meridian Links of the world, and what do they offer? So, instead of going out there and looking for a new fintech, but if I have an existing partner who also does that, let me look at their solution first. So I can just remain with one vendor instead of having 50 different vendors. So for us, the difficult part is really keeping an eye on the horizon and not jump on every latest trend that happens. Because we've got so many directions. We've got organizations that tell you, we've got consultants that tell you, we've got the members that tell you, oh, you got to do this, no, you got to do that. So it really comes down to what do I want to do to stay focused is what can I do to improve my members or my customers' experience? That's going to help you stay focused, okay? Because not everything is going to help their experience. And if it's not going to help their experience, might be item number 7 or 8 for me. Okay, so for us, the roadmap was very important because I looked at my members and I said, you know what, my members are not asking for this, nor do I have somebody knocking on my door saying I want this. But then we also looked at, the demographics of a buy now, pay later customer. It's usually the younger generation. It's usually less education, more debt, lower credit scores, and then higher delinquency rates. So then to me, it became a risk appetite question. Do I have that risk appetite question to carry more delinquency rates? And the answer was no. That answered my question that do I need to introduce buy now, pay later right now or not? And the other thing is our philosophy is I don't want to put my customers in a lot more debt that they can actually afford. And that's, those are some of the psychological questions that we have to ask to better understand how can I influence whether I want to use that product or not. I'm hoping that kind of makes sense there.
Yeah. So you looked at the buy now, pay later, and you decided to move on with it, or do it slowly, or finally, what was the decision that you reached?
At this time, our decision is we're not going to pursue it. It doesn't mean it's not on my horizon. It is on my kind of a wish list that I keep track of. Here's my wish list. It doesn't mean I'm going to do it, but it's there. We've reviewed it, we've looked at it, and we just don't feel it's the right time for us right now. Maybe once the industry overall, the financial industry is back on its feet, then we can say, okay, let's look at something differently right now because my risk appetite is better. But at this time, no, we're taking a back step on it and saying, hey, that's fine. And I really don't have any of my customers saying, oh my God, why aren't you guys offering this? So buy now, pay later becomes really a good for a member or a customer is when you are offering cards, for example, with high interest rates, 29%, 30%. Yes, buy now, pay later sounds very good for you. We are, as a credit union, our rates are very affordable. Okay, they're in the low end of it. buy now, pay later does not become a good option for them then. Okay, so the balance, that's why my members are not asking me for it because, they're getting good rates on it. As long as you make your payments and you pay off your card pretty quickly, you don't need a buy now, pay
Yeah,
later.
got it. Well, what about blockchain or something like cryptocurrency? Is that
Yeah.
something that you're adopting?
That is something else that last year we went heavily into it as far as let's understand this. Let's see how it works. Let's see if it's something that we can do. But it's another one of those solutions that after looking into it, after looking at all the risks involved, we decided that we're not going to be joining that. We're not going to be offering blockchain or cryptocurrency for you to buy from our platform. You can buy it from anybody else you want. We don't say no that you can't use your money there. It's all yours. But we felt
Yeah,
like once we brought it in house, for me to offer the members the option to go out there buy, it became a little bit risky from a couple of areas. One is that if you are one of my customers and you bought cryptocurrency through my site, through my website, and then
hmm
you have this and you're going to sit on it, you don't want to sell it, you're going to sit on it for the rest of your life because it's going to grow. But then what happened, 4 or 5 years later, we decided that, hey, we're no longer going to be partnered with this vendor, we're going to go to a different vendor. You can't transfer it over. You have to
yeah,
sell your cryptocurrency for you to move over this. And we felt that that's going to impact our customers negatively, because I'm going to force you to sell something because of a decision I made, or if that company got bought by somebody else, you're going to sell it. So there were a lot of hiccups that we were not comfortable with it, and the
I see.
opportunity for you out there to go buy it is a lot. I mean, you have so many ways you can buy cryptocurrency today that by me getting into that line of business, it's not going to help you in any form or shape. I think I'm going to be adding a little more detriment to your success instead of saying, nope, you know what, go out there and do whatever you want to do with that. I have no objections to that. That was our philosophical approach to it. But we did analyze
Got
everything. Now, will we support a blockchain technology? Absolutely. I think that's given. That's the future.
got it.
So we are
Okay.
working with the Visas of the world. Hey, what kind of blockchain technology do you have to manage fraud, to manage account opening? And we can take it. Yes, that we definitely have our sight on, and we're willing to participate in that because I think it's going to help the industry overall, including the customers.
I see. So you mentioned the blockchain technology. So you have in-house IT for doing those sort of applications, or the people? How do you?
We do have an internal IT team, but we're not into that blockchain technology kind of IT. No, we're going to be heavily reliant on outside organizations like like a Visa, for example, our core, our card processing, any one of those major organizations where they have going to take advantage of a technology, then yes, we'll jump on it.
What about AI and Gen AI in the financial institutions in general, as well as how are you trying to incorporate that?
Again, AI is not going to be that hard to incorporate, um, as long as you have a clear and understandable area where you understand what are your concerns with potential misuse of data, and the outputs it generates. I mean, that's really the most critical part of it. So, and how can
Yeah.
you build a transparency into the development and the deployment of it where I can foster trust with my customers, and I'm going to make sure that you trust my system when it comes to this. The other question is, how can I put ethical safeguards around bias, privacy, transparency? I mean, those are all the questions. The technology is there, it's great, but how can I use it? And then at the end is, how can I protect my users from risk? You know, what kind of
Yeah.
risk is out there? Because if anything happens, then it becomes my responsibility, not anybody else's. So we're working very hard in understanding what opportunities are out there, where it can help us and how it can help us. And we want to make sure company wide we have a strong foundations, that hey, if I invest in AI, you're going to have a strong data foundation. Okay, in order for you to be
Mhm.
successful in AI, you need to have a data foundation. And luckily for me, our organization is very strong when it comes to a data foundation. We've got a very uh, efficient and a strong BI, business intelligence team, and we keep track of all the numbers. So now we're looking at, in order for me to achieve what I call this state of predictability, we must be able to foresee what the output of the AI system is. Okay, in
Mhm.
order for us to be able to say, yes, we're going to introduce a kind of an AI type of a platform. that's really how can you better predict what the system's going to do in order for you to prepare yourself. And at the same time, we have to be with an open mind of you want to foster a culture of innovation and experimentation. You have to when it comes to AI. And sometimes in
Yeah.
our line of business, we're very scared to jump into innovation experimentation right away. We kind of want to sit back and see how it works, whether we want to take a risk or not. So the end result comes is, and just like I've told my internal team is that when it comes to AI, you have to collaborate with an external partner. You have to. You cannot stay at home and say, hey, I'm going to create my own internal. It's just not going to work. There's a lot of fintechs out there with the AI technology that they've spent the resources, the funds to create a product that they can really make it work. So it's a matter of how can I collaborate with them and take their system, my data, and then create that state of predictability when I can say, I know exactly what the AI is going to output. So, and we're at those stages right now, rather than saying, yes, we're going to do it.
I see. With the AI, what do you think are the blocks for the proliferation of AI?
One of the important things from the AI is you have to be able to create a reliable operating model. Okay. So you have to make sure you've got the right technical tools. You have to make sure you've got the algorithms in place. You got to make sure you've got the skills to build the solution. We know the data is the fuel, but there is no AI without some sort of an informational architecture, as I call it. So they're always going to have some problems with the data. So adaptability is going to be crucial. So my advice is avoid the hype and concentrate on what is valuable rather than what is interesting. So you got to have a reliable operating model in place in order for you to say, yes, this is how I'm going to service my customers. We're very quick in jumping the latest shining item out there, but no, concentrate on what is valuable.
Got it. You were mentioning the BI team. You have a robust BI team earlier. Can you tell me what is it that the typical value that you bring utilizing your BI team?
So the first important thing is hiring the right individuals. Okay, somebody who really understands data analytics, and then you can create a lot from that. So that was really crucial for us, and we do have somebody who is very knowledgeable, and we've hired everybody within that umbrella, people who understand data, because it's very easy to create an Excel chart. Say, here you go.
Yeah.
But what does that mean? That definition or the meaning is where you go back to your BI and say, hey, what does that mean to me? Well, this means you have this much risk. This means you have this much opportunity. This means this is what you can do. So the data is crucial. And a lot of us in this industry right now, we have data. We have a ton of reports. I mean, oh my God, I can give you a report on everything and anybody you want. But what can I do with that data? So that's why a BI team is going to be very important, not just to generate reports for you, but also advise you what's next. What can you do? How can you do this? What's your risk with this? What's your risk with this decision? How does it impact for example, if you do this, how does it impact your deposit or lending side? So it's a matter of taking the whole credit union or bank or financial institution and understanding every one of those data points in order for you to come up with a solution. Say, hey, this is what's going to work or what's not going to work.
I mean, if you have something on the top of your mind, can you tell me one of the success stories that you've seen through the BI side and how it helped provide value to your customers?
Of course. One of the things that we decided was as we ran promotions, whether it's mortgage, whether it's car loans, whether it's credit card loans, we have a tendency of going to segmentation. Okay, we segment our industry. Okay, Aris lives in Los Angeles. He spends his cards a lot, and that's it. I segmented. His white. That's it. That's our segmentation. But how can you take that a step further? So this is where it comes up to where I say, okay, I've got my demographic data. My demographic data, such as the gender, income, ethnicity, age, location. I have all that data. But now it comes to how can I make this value? How can I get some value out of this data? So this is where you apply stuff like what we call or what they call psychographic data. Let's understand Aris's hobbies, interests, attitude, beliefs, professional affiliations. We have all that data. I can see what you're purchasing. I can see where you're spending your money. I can see when you go out. I have all that data. So we have to better customize what we can offer to me. I don't want to get a home loan offer right now. I get it all the time. Well, that tells me you haven't done your homework. I already have a house. I already have a mortgage. I don't need another home loan. So those are the stuff that you have to really look at, and what can you do. So then our BI team helps us by looking at all those. We can create more personalized offerings to our customers. Okay, I'm a lot more price conscious because I can see you have a mortgage loan. I can see you have a mortgage loan with a Bank of America, and I know Bank of America mortgage loans are, example, 7%. Okay, maybe I can give you a refinance loan right now at a 5%. Who knows? But I can better customize, personalize my offerings to my members. Okay, and that's the whole purpose of a BI team. To me, that was our biggest success because we went a step further than what you call a segmentation. We wanted into a personalized segmentation. I want to know Aris better, so I know what can I offer him before he even thinks about it. I'm buying kids clothing. I can see that, my members going to a lot of kids stores, buying kids clothing.
Mhm,
Okay, they have a
mhm.
kid in line. That means in about maybe 10 years, it's about time to go to high school. Maybe we can offer them something at that time. You know what I'm saying? Preparing ourselves where, hey, I've got a nice plan. 10 years from now, I've got 500 people that I'm going to go after in order for them to give them a car loan, college fund, college loan. You know what I'm saying? That's what the data brings to you.
Yeah, I keep getting a lot of these sales messages from the banks or any of the other vendors, and I would say they're successful about 15% of the time.
Very
The
low. Yeah.
rest of the 80% is just junk, and I'm like, really? I was not even shopping for it. Why are you bombarding me with this at all, right? So it doesn't look like it's personalized. Maybe it's personalized to all the people within Atlanta that where I'm in. I don't know why I keep getting those, but glad that you're going to that level of detail to be able to come up with offers for your clients.
We're trying, okay? We're not 100% good at it yet, but we're trying. And with every time we dig deeper, we identify something different. So we keep tracking that differently. So it's a
Yeah.
learning experience. It's almost like our own internal AI model within the BI. You know what I'm saying? Because every time we come with an output, we learn something new with that output, and we go back and recreate that to see what kind of output we're going to get now. So, and it's only going to get better because the more we do it, the more experience we're going to have, the more we're going to know, the more we're going to rely on the formulas that we have in the system, the more we're going to rely on the output that we get from the system.
And I'm sure you're probably incorporating some, AI onto that models as well to get the best out of it. Yeah, in the
I'm sure.
future, maybe.
Yep, I'm sure the BI
Yeah,
team, the applications or the platform that they're using is using that type of a technology. We're just not calling it AI yet, but I'm sure there's methods back there that is doing that for us.
got it. The next question I have is on just the integrations that you have with various vendors that you have.
Yeah, yeah,
So could you talk a bit about that on how you integrate, what kind of issues you find, and
yeah.
so on?
Integration is a crucial part in our industry because in order for me to do business with any other fintech or anybody out there, whether it's a card processor, whether it's a mortgage loan, whether it's Alchemy, our digital platform, whether it's Meridian Link, our online account opening platform, you got to have integration to your core. If your core is not ready to have that integration, then you're stuck in a situation where I'm going to rely on my IT team to develop something custom. Well, once you build something custom, then you're stuck with this core. You can't really change it. So with every fintech that we look at, that's one of our first questions. What type of integration do you have into our core? For example, we use DNA. What type of integration do you have to DNA? What kind of APIs do you have with DNA? How much involvement is going to take from my end of it? So we look at all those elements as well. It's part of the overall plan of how you incorporate your business with that fintech. You know what I'm saying? We don't solely say, oh, you got to have integration, otherwise we're not going to do it. No, because if it's a product I can really capitalize on, we'll figure out a way. But it is part of the exercise that we go through. What are you offering? What are your pricing? And what type of integrations do you have? Because that all adds up together. So integration is crucial. I mean, you gotta be. In this day and age, as a core, a lot of financial institutions, larger ones, for example, like the Bank of Americas, the Capital Ones, they've got their own in-house cores. Okay, so it's easy for them to develop. But for the mid-sized financial institutions, I don't have that budget for me to create my own core. I rely on a DNA. So it becomes very important for me is any other new vendor that comes on board is they have some type of integration into my platform. Okay, so it becomes very crucial
Uh,
for us.
the DNA, could you just elaborate a bit on that? What you meant by DNA? I'm not familiar with it.
Sure. DNA is a Fiserv platform. We use that
Okay.
platform to do all our banking services. Our checking accounts are on there, savings accounts are on there, debit cards are on there, mortgage loans are on there, card loans are on there. It's our internal technology system that we use. Okay. Without a
I
core,
see.
you don't exist. I mean, you got to have a core in your financial, for you to be able to support your members and your customers and all that. And DNA is the name of the platform that Fiserv offers.
Got it. Got it. Okay. When it comes to, I know you mentioned earlier, BNPL is not something that you're currently pursuing. What are the other ones like? I mean, there's embedded finance. That's again another buzzword now. Are you delving into that, or can you just talk
Um,
about that?
Not really. We haven't looked into the embedded finance at all. I mean, it's not even in my horizon. Like we tend to focus by categories. So if we're talking about, for example, payments, okay, credit
Yeah.
card, debit cards, we tend to focus on how can I make my members' life easier with those two products? How can I add value to them by them using my card? So we might consider that, hey, we will offer a rewards platform that incorporates your entire life cycle with us. So you have a checking account, you can earn rewards, as a master
Mhm.
reward. You use your credit card, you earn rewards. You use your debit card, and then you can use those points to get a lesser percentage loan on a car loan or a mortgage loan or a security
Yeah.
loan. So we try to work within the products that we have, other than mortgage and auto loan, which they sit on my platform. We are heavily reliant on external vendors. For example, we use PSCU for our card processor. We process our
Mm.
credit and debit cards through them. It's not something that I can bring in house. I don't have the manpower, nor the technology, nor the resources to take care of something like that. So I don't want to say outsource it. The processing side they handle, customer service, issuing the cards, opening a card is all done by us, but the processing side of it, they manage it. Okay, so those are the ways
I
that we
see.
kind of look at how can we better offer products and services to our members, and how can we integrate them all together so I can create the loyalty that I need from my members. I want loyal customers. I want them to be with me for a long time. In order for me to do that, I got to offer them the right products and the right services at the right time, and we look at it from that
Mm.
lens.
Got it. Got it. And when it comes to 2024, I know we're already a couple of months in. What is coming down the horizon that you think is going to provide the value that you think is going to help?
2024 for us is really focused on, because we just moved into our DNA core, or we're in the process of finalizing it. Automation is going to be very important for us. Okay, how can I
Mhm.
automate some of the services, some of the tasks that I do? How can I improve the digital experience that my members have? And I can do that by how can I improve online account opening? I mean, right now, when you go, I mean, there's so many fintechs out there. You want a mortgage loan, fill out a paperwork. It takes 2 minutes. The system tells you right away whether you're approved or not. You want a
Yeah.
card? Just answer a couple of questions. Soft credit bureau check, approved or declined. I mean, that's speed. That is tying our hands into saying, hey, I got to offer that same service to my members. So we're looking at how can we incorporate these technologies for us to be able to do that. What I don't have Aris sitting in the background. Okay, we got an application. Let me see. I need this. And no, let the system do all of that. Let's automate that
Mm.
process. We can get a faster results. So automation is very important for us in 2024. 2025, definitely we're investing and researching AI and how it could help us better improve what we're doing. But for 2024, like I said, automation is crucial for
Automation.
us. Oh yeah,
Yeah.
absolutely, absolutely.
That I'm seeing is a common initiative amongst all the leaders such as you. automation is number one, right up there. Yeah.
Oh yeah. I mean, we learn from the outside companies out there. I'm saying, whether it's Amazon, whether it's, all these other fintechs that just come out of the blue. Next thing you know, they've got, you know, 500 million in loans just because they did it quickly. Yeah, their risk appetite
Yeah.
is bigger, but
Yeah.
I could have my regular risk appetite, but still offer that service in a quicker way. And that's what we're
Got it.
doing, automating for the members and automating internally for our employees as well. How can I improve my employee experience as well, not just my customer experience? Both sides of it, we're looking at it.
Got it. Got it. You briefly mentioned about the reward system. Do you, what kind of vendors do you use for that? I'm pretty sure that is also.
Yeah. So we use our credit cards, which is PSU's rewards platform. Okay. So we use that for our cards, for credit cards. We use merchant funded rewards for our debit cards. And then everything else is an add-on that we do. So if they open up a mortgage loan, you get a point. It goes into that bucket. We send them a file. Those points get loaded up, and that's how the system works. So we haven't really gone out there and start our own rewards platform, because there are companies and fintechs that offer that. We felt at this time and energy that we're going to be putting in, it's easier for us to capitalize on something that's already in existence, that's already working, that we understand it. We can just send them the file and the points get loaded. Very simple for us. So we went with that route right now.
Gotcha. Yeah, I think we're coming towards the end of the podcast. One question that I typically ask most of my stakeholders is, what kind of advice do you have for people who are doing your role for other credit unions and banks?
Advice, be diligent, but yet patient. Be very patient as to what you do, because we are very quick into jumping into making decisions without understanding the implications on our organization or our customers. Every one of the ideas, or as we have the roadmap that we create, we talk through it and talk through it and talk through it until, yes, this fits in with what we're trying. And we try to get in buy-in from other stakeholders within our organization as well, although they have nothing to do with it, but I'm interested to know what their thoughts are. Including my chiefs, including my board, including my other VPs in our organization. Hey, this is my roadmap. What do you think? How do you think? Again, be diligent, but yet be patient in what you do. That's going to be, because things are moving so fast. I mean, it is a blink of an eye. Things are just moving so fast. And then trying to do all of it at the same time, you just can't. Latest news that came out today, Capital One and, Discover merging.
Yeah.
I mean, that has huge implications, to us as an organization, because we are with Pulse, and Pulse is a Discover company. Well, Capital One is a Visa and MasterCard organization. Well, what does that mean from a dual networks for my cards? Because I have Pulse on my card and I have Visa on my card. Well, now if Pulse becomes part of Capital One, that means I got to go find another one. Well, in the regions that I'm at, I don't have another one. So what does that mean? So every day it's a new. It's you wake up, there's something like, oh my God, now I got to think about that. So patience, diligence. I mean, that's the only advice I can give.
Fintech world, there's always this mergers and acquisitions going on. So many of those on a daily basis. So yeah, it's difficult to.
But I tell my board and my chiefs, this is good for us. It really is good for us, because it has made us start looking at areas that I don't think we would have ever looked before if it wasn't for a fintech. My answer would have been, oh, no, I'm not going to do that. That's it. Yeah. I'm not going to do it. But now my hands are tied. I have to look into it, and I got to do something about it. So that's the benefit.
And with the M&A, there's consolidation, so you don't have to deal with so many different vendors anymore. They come up and they consolidate the integrations, so you don't have to build something else for some other new fintech. So I think it's good all along. Yeah.
Be patient, because you never know if this fintech company is going to be the same one a year from now, because they're brand new. Someone's going to gobble them if they're good. So you want to be the first one. Oh my God, what do I do? So times are different, man. Times are definitely different.
So Aris, thank you very much. Thanks for the insightful information that you've given to me and to all our viewers. I really appreciate your time.
You're more than welcome. Thank you for having me. I appreciate it.
Thank you very much, Aris. Take care.